What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. We haven't done this for a while, but you might be new to the channel, so I'm going to just breeze past that. Welcome. Today we're talking about BEEM Global. They're announcing their first quarter of 2024's operating results. It's a record first quarter. Well, every quarter pretty much has been a record because they're a new company, a growing company, a small company with aspirations. If you're not that familiar with this company, they are in the EV charging space. However, they're not a particular charger. They're more so, they sell a product called the EV Arc that has a solar component that it uses to charge your car. They can use any charger. It could be ChargePoint, EVgo, Electrify America, whatever the case may be. But the key is they're really selling business to business. And so for a business, if you want to provide charging for your customers or your residents, whatever the case may be, you can have this product delivered to you instead of having to deal with construction, permits, things of that nature. This company, BEEM Global, will come out and deliver this EV Arc to you and potentially save you some money. And you don't have to worry about an electric bill and things of that nature because these cars will be driving on sunshine. That is their 1 minute pitch. Hopefully I did it justice. I don't know. But this is a company with an innovative product, and they have several patents, actually. They're trying to be in the electrification business, not just for vehicles, but they're talking about drones. They have some things for streetlight charging, which Desmond Wheatley, the CEO, talked about a lot in the earnings call. That's another reason why I'm making this video, is because I took the time to listen to an earnings call, and maybe you didn't do that, and I can share something with you that I heard on the earnings call. But yes, they're talking about drones and aviation. They're talking about all kind of stuff, and they're trying to be a global company, right? A few years ago, they changed their name to BEEM Global. Even though they were headquartered in San Diego, they branched out. They bought a battery cell company that was based out of Chicago, so they have a facility there. They recently, in October, bought a company called Amiga that was based in Europe. Now that's BEEM Europe. So they're operating in a lot of these different segments. They're working with a lot of different companies and also governments. There are EV ARCs for the U.S. Army, for local governments like California. You see California state parks, but they also work with corporations like Costco, like Honda, Google. You see a lot of these companies below that are scrolling through here, but especially in California, because there is really an EV mandate. So companies are looking to quickly find charging solutions. And I think BEEM has some innovative solutions. And that's why I invested in this company. Personally, I own shares of BEEM Global. If you've been on the channel for a while, you would know that. But if you're not, hey, leave a like and subscribe. Anyway, we're going to talk about one more thing, get into earnings. So essentially, they have a lot of different technology. They have their patented trailer. They have the EV Arc, which we talked about. They have this UAV Arc for rooftop charging, aerial transport fleets, things of that nature. They have this solar tree that I haven't heard a lot from, but they have some patented technology there. They have BEEM AllCell, the battery company that I told you they bought. But the EV Standard is one thing that they talked a lot about in the earnings call. And I'm hoping to see more from that. I mean, you look at their website, they don't even really list it. You can't find that much more about it, but they're a growth company. They're a new company. They want to branch out and try a lot of different things. So I understand that. I would just like to see some more things, but perhaps I just have to be patient. So one thing we are seeing is record first quarter revenue of $14.6 million. That was a 12% increase over the prior quarter of the prior year. Before we get into this year's number, I'm just pulling up the prior year numbers. So we got balance sheet, income statement. Here we go, the income statement. So they had $13 million in revenue in Q1 of 2023, right? Comparing a year before that, they only had $3 million in revenue. So they had a big boom over the COVID years, essentially. This revenue growth from $3 million to $13 million is incredible. And it actually did a lot for their stock price. They actually peaked at the beginning of 2021 because a lot of this growth was expected and already happening at that point. However, when you go from over 200-300% revenue growth and you go to 12%, well, as a shareholder, that's going to be a little tough for you. However, gross profit, gross margin, these things are getting better. Their revenues grew, but their cost of revenues didn't really change, right? Still at around 13 million. So that's a good sign. Companies like Ford, there's an article about how they were losing $100,000 per EV that they built. A little misleading, right? Because a company that is growing a segment or their entire business, they have a lot of costs up front. It takes a lot to run a factory, a manufacturing facility, things of that nature. So all that gets put up front, and you have to sell a certain number of units to actually make up that cost, to have a better gross margin, to have net profit at the end of the day. Again, we're talking about a very young company, so we're seeing a net loss. So after all the revenue they bring in, they spent $13 million to do it. That leaves you with a gross profit of about $1.5 million. However, you have operating expenses. Now, they don't break out what these are, but I assume it's your marketing and advertising budget, salaries for a lot of different employees, things of that nature. And they're also have brought on these two other companies, the battery company and Amiga as well. You look up Amiga, they have a lot of employees, and they also reported $8 million, euros in revenue in 2022. So if you assume that that's even similar to today, you could actually probably attribute a lot of their revenue growth to the acquisition of Amiga. So that's something to keep in mind. So at the end of the day, you still have a net loss of about $3 million. So where is this $3 million coming from? We know it's not coming from debt because they talked about this. They're debt-free currently. They have a $100 million line of credit that's available and unused. What is the source that they're using? Their shares issued, okay? 3 years ago, they had about half as many shares as they do now. So they're using these shares to basically fund their losses and also to acquire these companies as well. That's something to consider when you look at their stock price and how it's been on a downtrend for quite some time. They're starting to whittle things down, right? Like as a shareholder, I own a little piece of this company. If you are a shareholder, you own a little tiny piece of this company. They're splitting your piece into smaller pieces and saying, okay, we're going to use that to acquire this company. We're going to use that to fund these operations. And if you're a long-term investor like myself, you want to say in the long term, this loss is going to turn into profit. And that's up to CEO Desmond Wheatley to do that. These charts show revenue growth over time. I'm going to focus on the green ones. So like we talked about, in their boom years, we saw 100% revenue growth, 300% revenue growth. And then it started coming down. We're all the way down to 15, 16% revenue growth. Still double digits, which is great for a company. To see this line going up and to the right is a good thing. However, if you can't turn this net loss into a net profit, the stock's not going to perform well. The key things that we want to see less shares issued, right? A lot of these big companies that are doing very well are doing stock buybacks. We're not going to see this from a small company like BEEM Global for a long time because they first have to get away from this net loss into some net profits that comes by improving your gross margins. The CEO talked about that a lot. So baby steps, one at a time. However, there's only so many baby steps you can make when your stock is headed towards $5 and below. And eventually you could get delisted if your stock price goes low enough. So something to think about. The stock is on a heavy downtrend. I'm in a cautious phase. I'm down on my position, but I'm very cautious. I do believe in the technology. I believe in the CEO's capability to allocate capital correctly. And I do have an interview with him on my channel. And I'll keep you guys posted if this is the kind of content you want to see. Again, please like and subscribe, support the channel, or else who knows, there might not be a channel in the future. So I really appreciate you guys. Thanks for tuning in. Peace.